Hello again, it's Suzanne Docobo, your favorite realtor. Before I was a realtor, I was a CPA in the state of Florida, and taxes have been a huge part of my professional background. Today, I want to talk about property taxes and some of the biggest proposals we've seen in decades. And this is going to affect homeowners, investors, rental property owners, and anybody who owns a vacation property in the state of Florida. There's a ton of things the headlines are not talking about, and I would like to be very clear and explain that so you can make the best decision so you can minimize your property tax bill. So what just happened? Florida lawmakers have sent an amendment that will be HJR 1F that's going to go to the ballot in the November 2026 general election. So because it's a constitutional amendment, it will require 60% of the voters to approve it, and it would go into effect, if approved, January 1st of 2027. What is the big headline? The big headline refers to the increase in the Homestead property tax exemption. Currently, it's $50,000 deduction that you get from your property tax assessed value in order to calculate your property taxes. With this amendment, the proposed increase would be up to $150,000 in 2027 and then $250,000 in 2028. Future years past that would be adjusted for inflation. There's one important nuance, and the nuance is that this doesn't relate to school-related property taxes. So if somebody says that your property tax bill is going away, that's not exactly true. Although that sounds amazing, that's just not correct. So basically you can have a huge reduction in your property taxes that you owe, but those are only going to be for the property taxes that are not related to the school portion of the property tax bill. What does this mean for a homestead homeowner? It means that you're likely the biggest beneficiary of this bill if it is passed in November. You can see a significant savings in your city and county property taxes. So as a CPA, I can say that exemptions, deductions are the best way to reduce your tax liability. So these are things that are definitely welcomed, and the biggest benefit is the actual primary residence homeowner. If you are already a Florida homeowner who's using this as your primary residence with a homestead, you can go to saveourhomesflorida.com, which is saveourhomesfl.com, and you can put in your address and see exactly how much the tax savings will be once we get to the $250,000 exemption in 2028. So I played around with this, put a couple addresses in, and what I found is that if you can take advantage of the entire $250,000 exemption in 2028, that quantifies to an annual tax savings of $2,897. That could be a substantial tax savings right into your pocket. One of the things that nobody is talking about that is very, very, very important is that this is for people who have established residency in Florida by December 31st, 2026. So there is a waiting period for anybody who establishes residency after that date, and it could take a few years in order to get to that exemption to qualify. So this is a huge planning consideration, right? If you're already a homesteaded Florida property owner, then you're good. But if you're planning on moving to Florida, then it would probably make sense to try to do that before December 31st, 2026, if you want to take advantage of this Florida property tax homestead exemption now. Based on the wording of the proposed amendment, this does not mean that you have to necessarily own your home in Florida before December 31st, 2026. The word in the amendment just says that you have to have a Florida permanent residence effective before that date. So let's say you're renting, you already live in Florida, and you have a Florida driver's license, you have a Florida voter registration, for example, you would still qualify even if you buy a home in 2027. So what matters is if you have established Florida permanent resident status before that date. What about investors? So now let's get to what a lot of our viewers are concerned about. How does this affect investors? Well, right now, there is a cap of 10% of increases on your property tax bill annually. This new legislation proposes a reduction to a 5% annual cap in increasing your property tax bill. So that is not necessarily an immediate reduction, but it does reduce the potential for future increases in property taxes. And in the long run, that could be something that is very, very lucrative for investors in the state of Florida. Another area where people are a little bit confused is when it comes to second homes. So a second home is not a homestead. However, it does still qualify for the reduction from the 10% cap to the 5% cap. So there is still a tax advantage for the long term there, but a second home does not qualify for the homestead exemption. So you want to make sure you understand which one you own. What should investors do now? My advice is simple. Do not make your investment decisions solely based on this property tax proposal. It may or may not pass. Also, we're not sure how the local governments will respond to it if it does pass. So what can we do? We can look at cash flow projections, we can look at our rental property analysis, we can look at planning for investment decisions, and also whether or not we should establish Florida residency before December 31st, 2026. So all of these things can have a significant impact on your financial situation. So these are things that you want to plan for now. As a CPA and realtor, I do believe this is one of the most significant property tax proposals I've seen in my lifetime. So how would you vote? Would you vote yes? Would you vote no? Please let me know, and we'll see you on the next video.